interoperability of transactions and payments is a huge issue. I'm sure there are many of us here that are all comfy in our coexistence phase as we migrate our SWIFT messages to ISO 20022. We see the growth of instant payments all around the world, and they need to interlink them. We see a fragmented regulatory environment, and I'm sure many of you have heard the gospel that we should all stop worrying and embrace all forms of programmable money and stable coins, and all of our worries will go away. But we're going to talk about all of this in 24 minutes. Excellent. So, as you know, this is such a big issue that this is a G20 goal to have seamless cross-border transactions, cross-border payments. For the large multinationals of the world, there are challenges, but they've basically, they know what they're doing. The real kind of meaty story, I'm thinking, and I think some of you as well, is with the SMEs and with the individuals. They're always the problem children of the financial world. So Shachar, I'm going to start with you a little bit. Is that where the real story is, and what's being done to kind of improve this for SMEs and individuals?
So personally, I don't think the problem only lies when it comes to interoperability across SMEs only and individuals. I think it's also relevant for large enterprises who are spending a lot of money on VAT, which could be redeemable, or FX currencies, and also struggling to send money. I think it's a fragmented issue that exists and impacts across the ecosystem. At the same time, what we're seeing the major layer 2s, the networks like MasterCard, Visa, integrating to multiple funding sources and networks using and leveraging private companies like the likes of Thunes and Currency Cloud that I bought recently. At the same time, we're seeing a competing ecosystem coming in, which is indeed a stable coin. And it got to a position today, I believe, that you see Visa adopting stable coins, you're seeing acquirers such as Nuvei adopting stable coins, you're seeing Stripe buying a company called Bridge that allows you to onboard, offboard from the regular ecosystem today to the stablecoin in the future.
It seems like that Bridge acquisition was like before and after. That was like that really kind of changed.
Yeah, I don't think it's much before and after. The stablecoin element has been going on for a while with Circle and XRP with Ripple. It's just that now you've got the big boys looking at that and beginning to integrate. But in the end, all those integrations are valuable, but they're as valuable as the adoption by the market, whether it's individuals, SMEs, or enterprises. And when it comes to adoption, the real element here, in my view, is going to be the experience. Because let's assume for a second Visa and MasterCard and the rest of the networks do not integrate to the likes of Thunes, Currency Cloud, and create a fungible ecosystem. The UX layer, the wallet, if you'd like, or whatever that UX layer might be, could integrate to each one separately and create this interoperability or fungibility across currencies and funding sources. So there's two ways to get to the same outcome. Actually, more than two ways. There's three ways to get the same outcome. One way is the infrastructure play, which many of my peers here are playing together with the big boys. The second one is stable coins, which might completely displace that in 5 to 10 years horizon. And the third one is the focus through the experience layer that could integrate all the two other players together.
So Jordan, I'll bring you in on this. Is that, are you seeing the same thing with the Robinhood side? Like, what is being done to help individuals and SMEs?
Yeah, ultimately, it's the customers that win, right? I think previously and historically, they haven't had access to capital markets, access to simple payment types, access to the ability to do what perhaps the institutions or private banking clients could do. I think when you look at capital markets, there was the way it was always done. There was traditional market hours, and customers couldn't access the market outside of market hours, but the market was still moving, right? We looked at that and said that's actually not right. It's 24/5. We gave our customers 24/5 access. There's a world where there's eventually 24/7 access. Tokenization, I think that's a perfect example of a technology that gives the end customer the same access that institutions, SMEs, everyone can benefit from. And you put all these payment types together and the movements of the money, you actually get an interoperable kind of experience. There's still some ways to go. I think you have the technology and the ability to get there and the firms to deliver it.
So Livia, I'll go to you. I mean, both Shachar and Jordan talked about like these different approaches and different levels and experiences. I mean, in terms of how the large multinational corporates are dealing with this, and and the experience that SMEs and individuals have? I mean, are there anything that can be learned? Like, what is being done to make sure everyone has that high-quality experience?
I think Shachar hit on the right point with regards to this point. You've got the infrastructure layer and you've got the direct experience layer and then the people trying to marry the two. If you look at global cross-border payments, the commonly known issues are cost, speed, access, and transparency. So we could say that large multinationals know what they're doing. They're still suffering very much from all of those. Why have we got cost issues? Because a cross-border payment goes through multiple intermediaries. Each one takes their cut. Corporate payment can, apparently the last figure I saw was 1.5% of the payment can go into fees. I think it's probably more. For remittances, it can be 6 to 10%. Remittances in the last year, I think, were around $630 billion. So 1% cut in fees could save people $6 billion for the most vulnerable in society, just to give some scale to the problem. So whilst everyone's suffering from cost, it's slightly more existential for SMEs and individuals. But I think it's more than just the fees. That is money that is no longer in the bank account of a small retail operator, for example. We've got this globalized world in e-commerce where the opportunity is there to cross-sell and to globalize your business, but actually it costs too much and it's prohibitive. Multinationals are still suffering from that, but it's not quite as existential to their business. So you've got the cost issue, you've got speed. Again, if a payment takes 5 days, every day that's money that's not in the bank account of an individual that needs it, or an SME that's trying to grow their business that needs liquidity for their supply chain, for example. In order to give everyone the best experience, we need to tackle those things on cost, speed. Access is usually easier for the multinationals than it is for individuals and retailers. SMEs are notoriously underserved. Transparency, knowing where your money is, how much money is going to cost, and also the card schemes, which Shachar spoke about. So if you want to do an international transaction, and someone in Germany is buying your product and you're in America, great globalized business, except it's going to cost you. And we need to tackle all of those layers. So the infrastructure layer is great, and we're talking about real-time payments and all of that. And then you've got technology and startup firms and fintechs trying to hit the consumer part of the business. What for me is really interesting is if the infrastructure develops, the only way it's really going to benefit is by increasing the access to real-time clearing. So if we've got real-time clearing at low cost, that solves some of those issues we talked about. But if fintechs or payment firms aren't allowed to gain that access, and it's only banks with direct central clearing, that's not going to work either. And so you've got the UK allowed access for non-bank financial firms 10 years ago. Instant payment regs brought that in Europe, but you've got the central banks not wanting to give them safeguarding access. So is that actually going to work? And I think that there's this combination of the fintechs and startups, that technology infrastructure direct with clients, building a great UI, and then the people in between are trying to work with a very slow-moving infrastructure build on top.
So Adam, I'm going to bring you in because I always like talking to SWIFT because they have this really nice sort of overarching global view with all of the members. And you know, when you're talking about cross-border, it's fragmented regulatory environments, fragmented technology infrastructure environments, fragmented policy environments. You know, how big an issue is this? Talk me through it.
Thank you. So it can be a really big issue for a number of the items that you've mentioned there. And SWIFT recently published a report that we worked on with The Economist that kind of looked at the economic cost arising from financial fragmentation. And there were some kind of fairly hard-hitting stats in there. One of the key findings was that in the worst-case scenario, where kind of cross-border capital flows decline at twice the recent norms, there could be, it was predicted to be, a 6% reduction in global GDP. Now, the prediction for the UK was better. It was still a reduction, but it was a reduction of 2.6%. So there is a real potential here for economic cost as a result of financial fragmentation. But I suppose just kind of picking up on some of the items, we do have a large number of people across the industry globally that are looking at tackling the challenges. Yes, there's the G20 objectives around speed, cost, transparency, and access. We see some really good statistics here in the UK for speed. We see that when it comes to kind of transactions coming into the UK is kind of within touching distance of hitting the 75% credited to the end beneficiary within an hour. We also do see that from a traceability perspective, 95% of the payments coming into the UK are fully tracked and confirmed end to end. So it is possible, but it's working across the global stage, the global organizations, really doubling down on interoperability to ensure that no country, no consumer, no business effectively gets left behind. And it is possible, I suppose, picking on some of the items around cost, we see, again, it's just payments over the SWIFT network, but for, I think it's around 50% of them, the principal amount is the amount that's actually credited. The amount sent is the amount that's credited to the end beneficiary. But there are some challenges around fees and Benny deducts that are still being looked at, and that's a key area of focus for us as we're helping to support the industry, whether it's banks, non-bank PSPs, fintechs, asset managers, in trying to tackle these quite large challenges.
No country, no business, no person left behind. That's like a button. Look at that. So, Andrew, I'll bring you in. I mean, how are you seeing these challenges? Are they too big? Or are they, are we moving in the right direction?
No. So I think firstly, Shach, thanks for the plug on Thunes. I think quite opposite. I mean, I'll touch on some of the risks of fragmentations, but I think it's a unique opportunity that's presented to players like us and many others in the industry, where essentially what we've done and for the last several years is building a global interoperable network by connecting to this fragmented landscape. So it really is an opportunity to create a diverse interoperable network. But I think some of the challenges, I think Adam, you were touching on it, is fragmentation will lead to increased costs, lower adoption, and ultimately that will stagnate cross-border trade. And I think just to touch on some of the colleagues earlier talking about SME, individual and corporate flow, I agree. I think the real challenge at the moment is SME payments. I think there's been huge strides in what I would call peer-to-peer consumer payments. I think if you look at the World Bank's claimed cost of 3%, I think there's been huge strides towards that. Real-time clearing, huge strides. But really when it comes to SME payments, there's an expectation now with the emergence of real-time domestic or regional schemes that if I can pay domestically in real time, why can I not pay cross-border in real time? And I really think it's an inhibitor to trade. It's an inhibitor to working capital. These SMEs obviously need to send payment, clear instantly to release goods to resell. So it's a massive working capital drain. So if we as incumbents cannot support real-time clearing for SMEs, trade will get stuck and costs will go up. So I think really for us it's about how do we demystify, harmonize this fragmented landscape to create one single entry point for consumers, businesses, enterprise merchants or corporates.
It's like the Star Trek world you're looking for. So it's interesting when Livia was talking a little bit about, the challenges around a small business not being able to grow and scaling up because of these issues. Rachel Reeves was on stage. This is a big issue now, growth for companies, especially in this country. So I want to bring Jordan and Shachar in terms of you as fintechs. Shachar, I'll start with you and then I'll go to Jordan. What are those challenges around dealing with that fragmentation?
So specifically for Curve, we actually, I would say, enjoy this fragmentation. We take advantage of this fragmentation by collating the entire fragmented ecosystem into one interface that speaks with each other. To simplify for the audience, the way we perceive the market is built from 3 layers, very geeky. Layer 1 are the banks, the issuers, where you hold your money and where you expect to receive your money. Layer 2 are the networks connecting the banks together. SWIFT is one of them, Visa, MasterCard is the other. What Curve did, seeing the fragmented world of money, we created a layer on top, connecting all the networks together, a network of network, with an interface for consumers, for SMBs, and so forth. And by doing so, you are able to let one network speak with another in real time at the lowest cost possible. There is still cost. The focus of Curve has, when it comes now to interoperability, is to continue the journey we had of connecting multiple networks together to enable them to talk with each other. Talking with companies like Thunes, for example, Banking Circle, are those infrastructure players that really helps with that. But our point of view, at least my very personal point of view, as the CEO of the company, is that the big guys, the likes of SWIFT, they had decades to figure it out. And in fact, they had over 10 years since the unbundling of the bank to figure it out. And it is my point of view, if I have to put a bet on if Swift and the likes will not change its value towards stablecoin.
Right next to you.
I know. I noticed that. But that's the price of not being customer obsessed. If they won't move fast enough right now, the entire ecosystem would displace with the new technology, and that is going to be the stablecoin technology. So I'm not trying to shake in the world. I think this is where everyone is going towards and believe in that, because it's in real time, very low fuel cost, very low cost to make those transactions. It's underpinned by currency we all believe, whether it's the euro currency or dollar currency, and support. And the time it will take to fix those systems, the likes of Swift, with existing legacy technology, going to be so long. Doesn't matter how many good engineers you have, probably better off just move to the new technology coming in. So from our perspective, as long as we focus on the UX layer and connecting the world, the fragmented world of money, we and our customers are fine. The main question, I think, is for the infrastructure play, how fast they can move and compete with new technologies coming in to eat their breakfast.
So, Jordan, I'm going to go to you. However, I just wanted to see whether Adam wanted to address some of those points.
All with love.
All with love. And I think they are big challenges to tackle. However, when you're looking across the world, it's ensuring that you have inclusivity. I mean, we have 11,500 connected institutions across 200 countries, well, more than 200 countries and territories around the world. We shouldn't be leaving anybody behind. And I think as we're looking at, we are very conscious at Swift that there's going to be a multi-network, multi-platform model. We are very much promoting a standardization of standards. ISO 20022 is an enabler of interoperability. And I think, with all the work that we're looking at around, yes, we are looking at stable coins, yes, we're looking around the technology, yes, we've got lots of activities going on across the world that are really looking to tackle and solve the problems and the challenges for today. But we're also working to ensure that we don't leave people behind on that journey. And I can see that actually interoperability is going to be the core of that, because you will have countries, territories, firms moving at different paces. So how can you connect between potentially a stable coin network to fiat, to a central bank digital currency, to fiat, on-ramps, off-ramps, and ensuring that you have full interoperability across the board? It's a challenge. We're definitely on the case.
So, Jordan, are you guys feeling left behind or included?
I'll leave Adam alone this time. I think capital markets is actually a great place as an example of fragmentation across markets. The US, our home market, is mature from a capital markets perspective, both in the market structure, but also from retail participation and comfort with investing, relative to the UK, where penetration in investing is very, very low, where it's a nation of savers. But you look at the payments infrastructure and landscape in the US versus the UK, the US is in the dark ages. I mean, we were joking about what the experience the customer has to go through in terms of they can't even instantly pay for lunch, which is crazy, right? But settlement times in the US, you can buy US stock for no cost and it'll settle in one day. In the UK, on your incumbent trading platform that has 40% market share, it's £11.95 per trade, plus a 50 basis point stamp duty. If it's a US stock, plus 1% FX fees. Those are barriers that are in the way for customers. But just hearing Rachel earlier on kind of transatlantic sandbox, but also on the digital asset roadmap, I think there's the opportunity where we can create some harmonization. The UK can really catch up in terms of having a regulatory framework, and it is where technology is going, it's where customer preferences are going, and there's an opportunity there to harmonize that where it isn't US, UK, Europe, and everyone's got a different framework. Global businesses are struggling to kind of match that up where they have to make a choice of where we're going to double down.
So we have a little over 3 minutes left, and I know Andrew and Livia have not had 2 questions. So I want to know whether, Livia, I'll start with you. Where are you seeing the opportunities to address, the harmonization?
I think there are really interesting projects going on with, for example, the BIS initiatives to bring real-time payments initiatives together, and what we're seeing being tried out predominantly in Asia. There are definitely opportunities for that. And at the infrastructure level, to me, that's probably one of the most exciting things going on, is how we can bring real-time payments networks together. That said, I read an ECB blog that said there are now 100 instant payment processes around the world. All we need to do is link them.
Spreading like locust.
Yeah, sure. We'll just hook them up. Like it's
I wrote that story for the banker.
like it's one of those switchboard wires. You just think, yeah, you're now connected. So I think that is something that's really interesting, but I do think it's a long-term play. To the point that Shachar made, I think due credit to the infrastructure player, it's incredibly difficult to do. But they are therefore inevitably going to move slower. Let's accept that. The really interesting thing for me is where we're seeing access points being opened up to a wider variety of players, so they don't need to go through so many intermediaries to get there. And as real-time clearing opens up to a greater degree of players, or where you get the people in between trying to deliver a more seamless experience for technology companies and fintechs, that's likely to be where you see the greatest opportunities. I think it's going to continue to be technology and fintech that offer the greatest opportunity to the customer. Infrastructure is moving, and there are fascinating projects if you're a payments geek, but it will lag, and I don't think the end consumer will see that for a very long time.
I'm seeing like Lily Tomlin in my head interlinking the payment systems around. It's a bit of a dated reference for you young people. Anyway, Andrew, why don't you, we've got 2 more minutes. What do you think of some of the
thanks, Liz. As I
organizations?
said earlier, I think ironically, this is an opportunity, fragmentation, in terms of the emergence of all these real-time schemes, regionally and domestically, for players like ourselves. So I think the individuals or the companies that can solve for the challenges are going to be in the short to medium term the winners. And I think some of the challenges that we are solving it's the harmonization of standards, it's the harmonization of the tech stacks, it's the harmonizations of the rules, be it scheme rules, be it local regulatory and compliance laws, and importantly, it's about the data stack as well in terms of the payload, because I think many real-time clearing schemes truncate because obviously it historically was built for domestic, so the data requirement to actually process a transaction is significantly lower than if you're doing a cross-border payment for AML and other reasons. So again, the challenges that we are solving at Thunes is to harmonize that, create one single entry point, create harmonization across that entire data, tech, rules stack. And I think the other important thing that I think, Adam, you touched on is that's all around systems, but we also need to look at the consumer and the emerging of alternative payment methods. You know, historically, the incumbents solved account-to-account payments. Now, there's millions, billions of wallets out there, and almost every day there's a new payment method that is emerging as the most popular payment method domestically. The question for us is, how do we connect? How do we connect quickly? And then ensure that we've presented something that's harmonized for our clients. So I think it's a question of that harmonization, but also ensuring that you stay abreast to some of the payment methods that is emerging globally.
Excellent. So I want to thank all of you, and take away, no payment left behind. Thank you very much.